Q4 FY24 conference call hosted by Prabhudas Liladhar Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Stuti Beria from Prabhudas Liladhar. Thank you, and over to you, ma'am.
Thank you. On behalf of Prabhudas Liladhar, welcome you all to the Q4 FY24 earnings call of S Limited. The management represented by Mr. Himanshu Gupta, MD, Mr. Saurabh Mitra, CFO, and Mr. Atul Soni, Head of Investor Relations, Treasury and M&A. I would now like to hand over the call to the management for opening remarks, after which we can open the floor for the Q&A. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. I am Himanshu Gupta, the Managing Director of S Company Limited. I would like to welcome you all to our fourth quarter and full year results conference call for FY24, and thank you all for taking the time out and joining us here today. I'm extremely happy to share that FY24 has been a milestone year for S-Charm on many parameters. I would like to highlight the following key points for the year gone by. We delivered the highest operating revenues in 5 years, up 9% on a YOY basis. We delivered the highest gross margin of 66% in 5 years, up 12% on a YOY basis. We delivered the highest EBITDA and EBITDA margin in 5 years, up 14% on a YOY basis. We delivered the highest operating cash flows in the company's history. We delivered the best working capital in the company's history, demonstrating the quality of business that we are conducting. We are proposing a final dividend of ₹3 per share. And to top it all, the company continues to be a net debt-free company in the last 3 of the last 4 quarters of FY24. The biggest achievement for this year has been the strong improvement in our working capital metrics, which are at historic lows. This unrelenting focus on working capital management had led us to significantly free up cash from the system and helped us to continue being a net debt-free company in 3 of the last 4 quarters of FY24 with net cash balance of ₹600 million. On the cash flow front, we have ended the year with the highest ever operating cash flows in the company's history. We continue to be free cash flow positive as well. Saurabh, our CFO, will give you more details on these financial metrics in his remarks. On the National Curriculum Framework, or NCF front, FY24 was a landmark year in terms of the announcement of the National Curriculum Framework for School Education in August 2023. This long-awaited announcement has come after a gap of 18 years. We look forward to utilizing this opportunity to the fullest over the next 2 to 3 years. During FY24, contrary to our expectation, the announcement of NCF for the school education did not impact the FY24 season much, since NCERT did not come with new syllabus books even till March 24. This led us towards lower adoption of new syllabus books, and more schools continue with the old syllabus books. On the higher education and test prep segment, we saw continued challenges in the segment as the semesters were shortened in certain universities and NEP implementation was not uniform even within states. There were also lower number of job vacancies announced by the government, which impacted the test prep segment along with stiff competition from YouTubers. We are working towards improving the performance of the segment by increasing collaborations with influential YouTubers and coming out with content which is relevant to larger audiences. On the EdTech front, our YouTube channel S-Charm Academy continues to have phenomenal success. We now have over 1,800 videos focused on higher education and secondary segment in topics covering science, engineering and test preparation. And so far, the channel has already notched up over 20 million views and 234,000 subscribers. This further enables the promotion of our content, which can spur demand in that segment. This channel enables students to learn critical areas through top-notch educationists, which may not be available in Tier 2 and Tier 3 colleges. We expect to add more than 70 videos for both the school and college segment this year. We launched Solid Steps, our integrated K5 curriculum solution, keeping in mind the core concepts of the New Education Policy 2020 during the year. The K5 program is meticulously designed to meet NCF 2023 guidelines, empowering young minds with essential skills, critical thinking, creativity, and a love for learning. Milestone, our K8 curriculum solution also continued to provide holistic learning to schools both in India and the Middle East. Looking ahead, we expect FY25 and FY26 to see maximum adoption of the new syllabus books in the school segment, which should help our growth trajectory for the company. Our strategic partnerships and collaborations have helped us to expand our offering and meet the changing needs of our customers. Our commitment is to continue this positive trend and enhance our financial position over the long term. With that, I would now request our CFO, Mr. Saurabh Mittal, to apprise all of us on the financial performance of S-Chan. Thank you.
Thank you, sir. Good afternoon, everyone, and thank you for your time. I am Saurabh Mittal, Group CFO of S-Chan. In terms of numbers for the full year, our consolidated operating revenues came at 6626 million versus 6103 million during the same period last year, registering a growth of 9% for the year gone by. The school segment has grown by 13% and the higher education segment sales are lower by 27%. We have achieved one of the highest annual gross margins at 66% versus 64% in FY23 on the back of a better product mix, lower paper prices and efficiencies. Our EBITDA profits crossed 1000 million for the first time in the past 5 years. We have reported an EBITDA of 1098 million versus 963 million, up 14% in the corresponding period. Despite taking salary hikes, higher travel spends on developing new content as per the NCF during the year. I am happy to share that our operating income went up 65% with profits of 484 million versus 292 million in the same period last year. We reported a PAT of 511 million in FY24. On the back of solid profitability, we have recommended a dividend of rupees 3 per share. Our greatest achievement during FY24 has been the commendable work done in improving the working capital metrics, which has resulted in the highest operating cash flows in the company's history at 1211 million versus 811 million last year. This is up 49%. The healthy cash flows have enabled us to reduce debt, negotiate better terms and focus on marketing our products and services better. I would like to bring your attention to slide number 8 to slide number 10, which showcases the result of the steps taken during the past years towards building a lower working capital organization and with focus on positive cash flows. In terms of working capital, trade receivables reduced to 2601 million during Q4 FY24 versus 2653 million during Q4 FY23. This is a 52 million decrease in receivables in spite of achieving incremental revenue of 523 million over last year. In terms of receivable days, it stood at 143 days versus 159 days in the same period last year, a reduction of 16 days during FY24. This is the lowest Q4 receivable in the company's history. Inventory increased to 1761 million versus 1562 million. The inventory increase is driven by higher raw material paper inventory of 633 million versus 436 million. Finished goods inventory was almost the same level as last year. Net working capital reduced to 157 days versus 188 days, which is a reduction of 31 days during FY24. This is the lowest Q4 net working capital days in the company's history. In terms of net debt, the company was net debt free in 3 of the last 4 quarters of the year. We were net cash positive as on March 24 at 600 million versus a net debt of 60 million at the same time last year. As we go into FY25, our guidance for the coming year is as follows. First, we are looking to grow operating revenues in double digits for the year. Secondly, we would be taking a single-digit price hike across our product portfolio. Thirdly, gross margin should be stable barring exceptional movement in the paper prices during the year. Fourthly, we have upgraded our EBITDA margin band guidance to 17 to 19% versus 16 to 18%. Fifth, we look forward to continuing our focus on working capital metrics and cash flow to continue. Finally, we shall continue to create content based on the new syllabus during CY25. This should lead us into a FY25 sales season with a much larger repository of new syllabus books for our target customers. We expect the promotion and sales season of FY25 to see higher adoption of new curriculum books by schools versus FY24. We should also see further announcements of new syllabus books from NCERT for more classes to happen during this year. This should lead to strong volume, revenue and profitability growth for the next 2-3 years period. With this, I would like to open the call for your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ranudeep Sen from Mass Capital. Please go ahead.
Yeah, thank you for the opportunity. While NCF was launched in August of 2023, but NCERT kind of spoiled the party by not implementing it. Are you confident of it being implemented for the next 2 years?
So, Randeep, it's not as if they haven't implemented it. They have announced classes 3rd and 6th syllabus in April of this year. So our belief is that they will continue to announce new classes, and that is how the rollout will happen.
Sure. Wanted to also understand, there was I think in some of the earlier calls you mentioned about monetizing the YouTube channel S-Chand Academy. Have you made progress in that space?
Not yet, to be honest, and we're still reviewing our strategy on the S-Chand Academy at the moment, because the focus was for the last year has been to bring out content according to the NCF. So that is why we are focused on. The S-Chand Academy, we are reviewing what we wish to do, and probably by the next quarter call we will have a definitive strategy on that.
Sure. Next, wanted to understand, if I look at Pearson, which is a $6 billion company globally and dominates the US publishing space, have you tried emulating business models from them?
In terms of acquisitions?
Not just acquisitions. I think their business model varies across electronic media, publishing. There are various interesting business models. So just wanted to understand, as the management kind of spend time understanding their business model, given they're the global leaders.
Pearson already is in India. Pearson have an office in India, but according to our sources and information, Pearson is not very faring well in India. It has sold its school education division to a company called Lead last year, and those things are already happening. So Pearson is not doing very well in India, and the things that work in India, we're already working with them with our strategies, and because everything which happens globally cannot be replicated as is basis in India. So we have to be very careful that what works in India, where the market for us lies. So we are continuing on those strategies.
Sure. One last question. Given we are a debt-free company now and generating good cash flows year on year, how far have we progressed in our latest acquisition? I think you mentioned last time, I think we are towards the closure of our new acquisition. Any update on that?
Yeah, I mean, so there's a gap in between. We are reviewing that in terms of the acquisition, because there were certain things that did not work out. So we are in the review process. We are still in negotiation with them.
So thank you so much. Thank you.
Thank you. The next question is from the line of Nitin S. Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, go ahead.
Yeah, okay. Couple of questions. So we mentioned double-digit, revenue growth for next financial year. Now double-digit is or can be from 10% to 99%. So can we be a little more specific in terms of this guidance, because that will help us understand where are we headed?
So Nitin, I mean, to be honest, having looked at last year and reviewing, we will be in a better position once we start seeing the adoptions of schools somewhere around the mid of the third quarter. So I mean, to give any kind of guidance, I mean, of course, the baseline should be around 12 to 13%, but I mean, we are targeting a higher number.
So Nitin, there is a level of uncertainty right now around this. So that is precisely the reason why we have. This is precisely the reason why we have not given a numerical guidance.
And Nitin, the elections are also just finishing up around the corner, so that will also depend. on if the same government continues or if there's a new government which comes in, what will be their policies, what will be the things. So it's very difficult to say right now.
So I think we will be better equipped to answer that probably by by the third quarter.
By the third quarter, because most of the business comes in the last quarter of the year. I understand that. Okay. But even if, for example, after 4th June, we may have some clarity if the government is continuing or not continuing that way, and that will give us some indication about the possible revenues by implementation of NCFs or discontinuation of NCF, whatever happens post 4th June, right? So we'll have some idea about that.
Yeah, so if the existing government comes, then it's obviously a continuation of their previous policies. That part is correct. But I think let's wait for 4th June.
Got it. Okay. My next question is about the paper prices. So how is paper prices now in our inventory level, and how do we expect the paper prices in coming months? Because a lot will depend on paper prices as well, and if NCF is getting implemented, then the demand for paper could be different, and the prices would determine a lot of profitability concerning the publication of books. Though we may be taking some hikes, but still paper prices will help us understand where are we heading.
Yeah, so paper prices right now, I think from the year before that have come down last year, and right now, as of now we speak, I'm not seeing any increase in paper prices, but people in the market are saying maybe after the second quarter or third quarter, or after second and third quarter, the prices might increase because of maybe buying from the government, buying from even export market, and even domestic market consumption will increase. So right now it's very difficult to say where the paper prices will go, but I feel paper prices largely should be constant with minor increases this year.
Only thing, having said that, we've got large inventory already in hand. So our paper procurement this year should be 20 to 30% lower than the previous year.
So paper procurement in terms of this year, procurement will be less than last year, much less.
I got it. And any other plans of acquiring any companies in the foreseeable future now? Are we looking for any opportunities for inorganic growth as well?
So we always are open, and we always look out for opportunities. If the right opportunities strike us, then we evaluate it, and if the deal happens, it happens. So we are always on the lookout. It's nothing like we are stopped looking out. But the problem is getting the right opportunity, the right value. That becomes a little tough.
My final question is related with our investments in new age companies, wherein we are providing some small capital over there. So what are our plans? Are we investing, looking for any other opportunity now actively, or we are continuing where we were? And are we planning any exits over there in any of the invested companies?
So I mean, currently we have 2 investments, not exactly looking at exit in any of them. Both of them are doing, SmartUD is doing exceedingly well. iExam, we had a very stable year last year. We continue to get investor decks for investments. There are some ongoing discussions, but not anything to talk about at this stage. As and when something comes up, we'll definitely inform.
I got it. Regarding SmartUD, have they taken any other funding now, or the last one that they've taken after that they haven't done anything? Any idea about that?
So they are cash positive. They're generating money. So as of now, they really don't have a requirement to raise debt. But as and when there is something that comes up, definitely we will know. I mean, discussions are continuing on that line, but as of now, there is no fundraise in the next 6 months, as I see.
And what was the last valuation round when they have raised the capital?
I think it's around 120 crores odd.
Got it. Okay, thank you so much and wishing you the best.
Thank you.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1. Our next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Hi, good afternoon, sir, and thank you for the opportunity. So my first question is regarding our margins. So we had margins like 20% plus kind of margins before 2018, and now it's much lower than that. So what I can understand is paper prices has much to do with it, with this lower margin. So are there any other factors which are limiting us to achieve those margins back?
Yeah, so if you look at prior to 18, of course, there's a lot of aggressive growth during that period, and the working capital metrics also was not great. What we have also done is re-looked at our working capital metrics. So I mean, just margins to increase margins of 2% to drive that kind of volume growth is not efficient to working capital. So there are 2-3 factors which have led to the decline in margins as of now. But we of course have already upped our EBITDA margin guidance for the current year. So 2-3 issues. One of course was the implementation of GST in 2017, which has had about 100 bips to 150 bips impact, because we do not get input credit on any of our products. So there have been issues of reverse charge GST on royalty, and increase in the GST of printing outside, plus the GST rate at 18% for almost everything. So that's one. The other thing, of course, is because of during COVID, of course, the volumes and the revenues were lower. Of course, the baseline costs, we've done quite a bit on the baseline costs, but of course, beyond a point, you can't really go low. So as and when volumes start going up post the NCF implementation, the margins will improve. But of course, they should improve on a regular basis. There can't be any knee-jerk movement of margins. We are working around looking at each and every aspect of it. If you look at most of our working capital metrics, we are far better than what we were pre-COVID. I mean, these are numbers in terms of net working capital days, in terms of receivable days, are far better. And even on the operating cash flows, I mean, 800 crores, even at 20% EBITDA margins, we were making what?
So we were making around 38 crores of operating cash flows at that time.
So we are at 120 crores plus. So I think that's more important for us in terms of generating cash, rather than just looking at one part of it, which is the margin percentage.
So also, if you look at the operating metrics, most of them are down by 50% from 5 years ago.
Sorry to interrupt. Sir, your voice is sounding very muffled.
Okay, so can you hear me now?
Yes, sir.
Yeah, so what I was saying was that if you look at our operating metrics, most of them have, they have declined by 50% over the last 5 years. So we have to look at these numbers in terms of the cash that we are generating, which is probably up 3x in the last 5 to 6 years, and the operating metrics, which have seen a huge improvement. So I think we would like to look at it like that.
Okay, and so with respect to sustainable margins, so could we expect a margin near 18-20% or more than that in coming years?
So we are looking at it year on year, and I think in a year where we have paper prices declining a bit, of course we could look at that 20%, but a lot of factors involved in this. I mean, of course, product prices cannot increase beyond a point. Paper, of course, is the biggest lever in terms of that. And of course, everything depends upon volume growth. So once you have volume growth, I think we can look at improving margins.
Yeah, okay. That's all from my side. Thank you and all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Bharat Sheth from Quest Investment. Please go ahead.
Hi sir, am I audible?
Yeah.
Yes, sir.
Hello?
Yes, you are.
Yeah.
Pardon my ignorance. My question was this new course that we are talking, which has been announced in August 23. How does it really going to play out for us as well as overall on the whole education? What NCF new course?
Sorry, you want to ask how will it play out for us in the new syllabus? You mean to say?
As well as the overall industry, because ultimately overall industry, because what will be, I mean, differently it will be done from the existing one.
The new syllabus will means getting new books in the market, and when you get new books in the market, the used books or second-hand books come out of the market, and the schools take all the new books for their use, and that increases the market share of companies which have good brand, good content, and good relationship with the schools. That affects them positively. So that's how it will have a positive impact in the group for next 2 to 3 years.
Okay, and what I understand that you said that it has not yet been only implemented from standard 3rd to standard 6th. Is that correct understand?
No, they have announced the new books for only class 3rd and class 6th as of last month. We expect over the next couple of months there should be more announcements of more classes. So far the new syllabus is only there from classes prep to 3rd and now 6th.
So for whatever change that we will be at least to that extent will benefit this year, correct?
Yes. But that is as of today. We expect that over the next 6 months you will see more classes, new syllabus being announced.
So how much whatever is being announced can help us? I mean, what will be our revenue contribution from those books, whatever has been now announced?
So for the school segment, our for till our class 8 is almost 60% of our school revenues.
Okay, thank you very much, sir, and all the best.
Thank you. A reminder to all the participants, if you wish to ask questions, please press star and 1. The next question is from the line of Vikas Modumbi Kasturi from Focus Capital. Please go ahead.
Yeah. Hello, sir. Am I audible?
Yes, go ahead.
Yeah. Okay. Thank you. So good afternoon, sir. I had a couple of questions. So one is, so year on year, there has been a great improvement in the receivables that, every year it is reduced. And so is there scope for improving this further, or this is like, I know this is among the best, but is there scope to improve this further, sir?
Yeah, definitely there's scope. I think we still have to work on the inventory side of it. Receivables also, to the extent that, there is always scope to improve. So I think there is still scope to improve.
Okay. That's very heartening to hear, sir. The second thing is, somewhere I came across, maybe in your DRHP, sir, that there are about 10,000 publishers in India, right? It's a very fragmented market. And I think in one of the interviews you had said something like you had about 12-13% kind of a market share. So my question is the industry consolidating or likely to consolidate anytime soon, sir? Are you seeing some trends in that direction?
So I would like to say here that the market got affected financially quite badly after the COVID, in terms of COVID. So COVID actually had shaken up things in a lot of publishers, and a lot of publishers we are seeing that financially not able to compete properly, and they have issues of buying paper, issues printing, paying their suppliers, paying their salaries to the employees, and receiving collections from the market. So all those things are factoring up, and we are seeing players are getting weakened, and fortunately we have been on the strengthening our company, so that's a good part for us. So I feel the market is, I will not call it exactly consolidating, but yeah, market is trying to play for the strong players in the market. So the strong players will definitely have an edge over the weaker players. And that is where we feel a company like us or a group like us will have an advantage over others. And that's what I feel.
Okay, got it, sir. And one last question, sir. I was unable to understand the exact role or the dependence on NCERT as far as the NCF implementation goes. So if you don't mind, could you just provide a sort of explanation on that, sir?
So what happens is that when NCERT comes out with the new books, that becomes the benchmark, right? So so thousands of schools across the country will say that, now since the new book is out, they will say that we want to now purchase the new syllabus books for our students as well. So it becomes a trigger. As long as the NCERT books are not out, people can choose to or opt to go with the older syllabus books as well. So that becomes like a big trigger for moving to the new syllabus.
Okay.
It becomes like the
Thank you,
benchmark.
sir.
So for example, if you are a school owner or a teacher or a HOD of a particular subject, if there is a new syllabus book by NCERT, then you can't be using the old syllabus books. I mean, people will question you. The parents will come and question you. So that is why it is the biggest trigger for movement or adoption of the new syllabus books from private publishers like us as well.
Okay, got it, sir. Thank you. One last question, sir. Sir, on the balance sheet, we have a big chunk of our total assets is actually sitting in goodwill, sir. And we have said that we don't want to impair, reduce that amount because you don't see any impairment in the acquisition. So my question is, sir, because of that large amount sitting in the goodwill, that is artificially depressing the return metrics like return on equity and return on capital. So is there any thoughts that you could share on, do you plan to amortize this in the future, or this will remain the way it is?
Yeah, so I mean, we've had this conversation multiple times on the goodwill, and it only, if you look at it, it stands in the consolidated financials, not on the standalone financials. If you look at the standalone financials of each individual entity, of course, the return ratios are much better. It's only because of the premium that we paid on the acquisitions that our return ratios are impacted. So somebody has to look at the return ratios net of that goodwill to actually see what kind of returns we are making. So there is no at this point of time there is no conversation to impair that goodwill, because again it's on the consolidated financial numbers. It's not part of any individual balance sheet.
Okay. So, sir, actually, you would know this better than me, sir. So, because we've been paying down our debt, our total assets are actually reducing. So, the goodwill as a percentage of total assets is actually increasing because the denominator is reducing. And so, therefore, our equity component is also going up. And, as a result of which, artificially, the return on equity looks much lower than so it's only when somebody looks deeper into all the wonderful things that you've done and how the cash flows have improved, it's only then that they understand this.
So the only other option is to write off the goodwill in the financials. I mean, so we haven't had that conversation, to be honest. That's not something that we are looking at any point of time. Possibly if we can merge the companies into a single entity at that point of time, maybe possible, but at this point of time we don't see a major impact because of that.
Got it, sir. Got it. Thank you, sir. I'll come back in the queue. Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, please press star and 1. The next question is from the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi, good afternoon. Couple of questions. One is on the extension of goodwill. I think on the consolidated, there's an increase of 50 crores of intangible, which I reckon is goodwill. Can you explain what is that increase about?
During this year?
The intangible.
No, there's no increase in the intangible goodwill in this year, current year.
Is the goodwill marked under intangible or is it marked under something else?
So goodwill is separately. If you look at the financial statements, goodwill is at 3325 versus 3357. It's reduced by about 32 million or something.
Okay. I think this is incorrect. Or I think sorry for that. Now coming to the new syllabus. Is the understanding correct that they have to come out with a new syllabus within the next few months? Because if someone is using the new syllabus from year 6, when they go to the next year, they can't be moving back to the old syllabus. So if someone is adopting the new syllabus, they will have to continue with the new syllabus until K-12, right?
So I think syllabus has already come out last year only. The only thing that has not come out is the NCERT books. So NCERT comes out with books as per the syllabus, which become the benchmark for the market. Now, a lot of schools use NCERT books. A lot of schools do a mix of NCERT books and private publisher books. So the catch here is that till the time NCERT does not come out with the complete set of books, schools are in confusion of whether to follow the NCERT books or whether to follow the NCF, the syllabus which has already come out. So a lot of schools have already transitioned. I would say 10, 15, 20% of the schools have already transitioned to the new syllabus and taken books across all classes from private publishers, even if NCERT has not come out with its books. It is the other 80-85% which are sitting on the side waiting for the NCERT to come out with books and see what are the changes done, and then go ahead with whatever classes they want to work with private and whatever classes they want to work with NCERT. So just to make an understanding, NCERT books are about 30 to 35% of the total market in that segment. So the market share of NCERT is about 30 to 35%. Rest of it is the private publishers. So that's the impact, because it's being the largest player. A lot of schools would use a mix of both.
Yeah, but my question, I understand, but my question is the new syllabus books that they've come out is only until year 6. Did you say that it's only until year 6 that they've come out now?
No, so K to 2 came out the previous year. The books are already in the market, kindergarten to class 2. Additionally, in March, they came out with classes 3 and 6. The classes 3 and 6 also, they came out with digital versions. They did not put it into print, so the schools could not prescribe them in schools, because till the time the books are not available, printed books are not available, the schools cannot prescribe it. So that was the challenge. Now probably by the end of this, by October, November, I'm sure they'll probably come out with all the books up to class 8, and then it'll be the complete implementation during the next season.
Okay, got it. Okay. Now the last question, naturally, I think on the capital allocation side, with we becoming debt-free and hopefully our cash generation would be north of 120 crore that we did last year. What is the management thought process and plan for the capital allocation? I know that you are talking about inorganic acquisition and all, but what is the thought process now? I mean, that becomes even more relevant given that kind of cash flow with 700 crores of top line and 900 crores of the market cap. So any clarity on that would be really helpful.
Yeah, in terms of that, so we've already commenced the dividend distribution last year, and we are retaining the same amount this year because our profits are also around the same range. In terms of acquisitions, we were discussing one. Of course, there are always opportunities, so we would like to keep some money aside from that. And of course, once we hit a sweet spot of about, let's say, 100 crore plus in terms of cash, then we'll probably start thinking of a buyback.
Okay, so that buyback is in the mind of the board and the management already?
Yeah, definitely.
Is that correct?
Yeah, definitely.
Okay. Got it. Thank you very much for answering all the questions. Thank you.
Thank you. Participants, If you have any further questions, you may press star and 1. The next question is from the line of Manan Patel, who's an individual investor. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Sir, thank you. So first of all, congratulations on the great work on profitability and the balance sheet. So first question is regarding the investments that you have mentioned that you are making in employees, developing new curriculum and marketing. So can you throw some light on what kind of improvement in number of schools that we are addressing, number of geographies, number of classes? So could you quantify those numbers so that we can have some idea on kind of market share that you can gain going forward?
So in terms of geography, we are there pan-India, so I don't think there is any location that remains uncovered. We are there pan-India plus of course Middle East, which is a large market for us. In terms of content also, we K-12, we are across all subjects. Of course, we've added a couple of subjects in terms of artificial intelligence, coding, that has been announced. That's part of the robotics and all, which have been part of this thing. So we're slowly building on the additional subjects that have been included in the new curriculum. We're having some reasonably good success in that. In terms of number of schools, again, the coverage is there in about 45,000 schools, and almost 60% of the schools are user schools which use our product. So again, we have to and of course in terms of state board, we have a large offering in West Bengal. So that's where we are in terms of coverage.
Understood. That's very helpful. And sir, as with 3 to 6 class new books are out, so do you think like June is, I understand, 15 to 20% of our revenue? So does it make any impact on our June revenue? So do we see a growth in June quarter from those classes?
June is closed. Yeah.
No, the academic session starts in April. So I mean,
June is closed, boss, because summer holidays.
Yes,
The
so
schools are
academic
closed
session
all over
has
India.
already started. So whatever adoptions for this academic year already have happened. So we don't see a substantial jump because of these books. And anyway, the books are still not out. I think probably by the end of June, July, the books will be out in the market. So we don't see any impact.
This is not going to happen any impact on June quarter.
Okay. And sir, so while the timing is uncertain, but when all of these NCERT comes with books for all of these classes, so do we see ourselves hitting a revenue of 900,000 crores? We have done 800 crores in FY18, but can we reach a 900,000 crore revenues when all these books are in place in next 2 or 3 years?
Yeah, that is definitely a target. But having said that, we'll be prudent in terms of the kind of revenue growth we are also looking at, because we continue to focus on our working capital and cash flows.
And quality sales.
Quality sales. The quality business we will not dilute at the cost of.
Sorry to interrupt. In between, your audio was going really bad.
So basically, Saurabh is saying that we want to continue on the path of quality sales. So just to increase the sales or growth in sales, we're not going to compromise on the quality of the sales, which make sure that the collections is in line, the working capital matrix is in line, and all those factors. Otherwise, collecting payment from bad customers becomes very tedious job, and then the returns also become high.
Understood. So just to so given the good quality of customers that we want and our learnings from the past, so is there a market enough for us to reach 1,000 crore type of sales?
Yeah. Market is quite big. Market is quite sufficient. It is just that as I said earlier, there is a kind of consolidation happening in the market where the weaker players are not able to compete with the stronger players. So their stronger players like us will be able to capture the more market share in the market, and that's what I feel we will be doing in the next 2 to 3 years. We are just waiting for the syllabus change. Now the syllabus change has already started. So next 2 to 3 years, I think we should have a good runway if the syllabus changes happens on time from the government.
Understood. And so lastly, on understanding the capital allocation, I understand previous participant mentioned about the capital allocation and you mentioned the buybacks. So I understand you mentioned 100 crore number before you want to think about the buyback. But the market being what they are very unpredictable, and given we are at around 850 to 900 crores market cap generating around 120 crores of cash flows. So would it not be more prudent to do buyback when the stock price is available cheap and we might not have imminent capex plans and still have a 60 crore balance on or cash in hand? So it's just a suggestion and would love to hear if you have any comment. So better do it when the prices are available. Once the new syllabus starts coming in, market might recognize and the price might also move up. So it looks like a very cheap stock at this point. Would love to hear your thoughts on this. Yeah.
So on this, see, if you look at, if you follow up numbers on a quarter-to-quarter basis, quarter 3 still we have debt at the end of in our books, right? We are a cyclical industry where we have to invest upfront and then and the money flows at the end of Q4 to us. So we are slightly prudent because we do not want to be strapped for capital at the end of Q3 building into the new season. That is why we have put in a certain number. We know that once we cross 100 crores, probably we will have enough cash to ride us through the season where we require capital, and then so I think another year's time would definitely give us that kind of strength. So we've had 2 good years, but also we've had 3 very difficult years of COVID. So we would like to conserve some cash so that we continue to have a runway in our books, so that we are not borrowing or we don't have to go back to the markets to raise money.
Understood, sir.
Also, at the same time, it's prudent if you come out with a buyback, then you come out with a buyback for a decent amount. I mean, just having a buyback with a very small amount of capital allocated to it, I don't think it does justice as well.
Completely understand, sir. But when you are talking about the numbers that we are planning to do or will happen with the syllabus, the prices will also not be at the same level. Should not be at the same levels ideally.
But so see, the thing is that from a business perspective, we have to balance risk as well as reward. Okay, so I mean, we have to see in terms of debt. We might do acquisitions. I mean, who knows? I mean, nobody foresee COVID coming, right? So that's what COVID has taught us. So I think that's a tricky balance to achieve, and that is what we keep on deliberating even in our board meetings, and we are cognizant of that fact. Yes, the timing of it will be dependent as per the board, the thinking as well.
No, I completely appreciate you not putting the business in jeopardy just for this. So this was my suggestion. So thanks a lot for your views on this.
Sure.
Thank you. Participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Pradeep Rawat from Yogi Capital. Please go ahead.
Thank you for the opportunity again. So I have a question regarding the NCF. So do you see any risk of implementation getting delayed and being done in a phased adoption manner from the side of NCERT?
Not really, I don't think so. I mean, there's any risk to it not being implemented, of course, unless there's a complete change from the government side. Depends on what happens on the 5th of June.
So I think that answer you will get on the 4th of June. 4th.
Okay. And can you share the number regarding the revenue for class 6 and then 6 to 9 and then 9 to 12?
No, we have said that out of the total school revenues, K to 8 is almost 60 to 70% of the revenues. And I think in our earlier releases, we had mentioned K to 2 was almost 10 to 15%. So 2 to 8 or 3 to 8 will be approximately, let's say, 50% of the school business.
Okay. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you, everyone. Thank you for your questions. It was nice to talk to you, and we are happy to have good results, and we'll continue on the path of quality sales and ensuring that we deliver better results next time. Thank you for all your support and cooperation. Thank you.
Thank you.
Thank you.
On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.